now it's time for Monday Morning Markets. Thanks to our partners Forsyth Barr, Zoe Wallis, investment strategist there is with us again. Morning, Zoe.
Good morning, Ryan.
Good to see you, and it'll be good to see a cut to the OCR come Wednesday.
Absolutely. We are looking for a 25 basis point cut. And look, I think that's very much baked into market expectations, and the vast majority of economists also calling for 25. The big question will be, though, what happens after that, I think. So what you've seen in the data since the last meeting in July has essentially been that inflation pressure in the near term looks like it's rising. You know, we had food prices up 5% year on year. That's expected to feed through to annual CPI hitting about 3%, which is very much the upper part of the RBNZ's 1 to 3% target range. However, that's very much a near-term issue, and we do expect inflation to still fall back next year, which should mean that the Reserve Bank can continue on the easing path. When you look at economic growth over the last quarter, you know, I think there's clear evidence that Q2 is likely to be pretty weak or even negative GDP growth. But we've had some early indications that things are starting to tick up a little bit, and that's been coming through in both company reports and some of the more timely economic data that hopefully the second half of this year should be looking somewhat better. But we still expect the Reserve Bank to cut this week and then probably deliver one more 25 basis point rate cut.
Because best case scenario, it would just be like a little Q2 blip post Trump's Liberation Day tariffs, right?
Yeah, look, and I think you did see that clearly coming through and having an impact on business and consumer confidence. Headlines about inflation heading higher again, what that meant for global trade and what that meant for, you know, the global economy. We were talking about an outright global economic recession there for, you know, most of April. That obviously has been eased, concerns around that, and we are seeing, you know, sentiment start to come back. As I mentioned, we're starting to see, you know, consumers feel a little bit more comfortable opening their wallets. It's also worth noting that, you know, about 50% of mortgage debt is rolling off in the next 6 months, about 80% in the next year. So consumers are going to get those benefits of rolling on to lower interest rates in the next 6 to 12 months. Unfortunately, on the flip side of that, though, it does also hurt those who have money in the bank and savings, and about 80% of people are either on a short-term fixed rate or actually on floating rates, which means the moment the RBNZ cuts, unfortunately, they feel that on the other side of the savings balance as well.
Yeah, good point. Now, you mentioned reporting season both here and across the Tasman as well. What updates do you have for us on that?
Yeah, so look, Aussie reporting season so far has been largely in line with expectations, I would say. Everyone going into it, you know, the consensus was for negative earnings per share growth of around 2.5%, and that seems to be about where we're tracking. Despite that, we are seeing, you know, the Australian equity market alongside the US did hit a new record high at the end of last week. So we're still seeing a fair bit of positivity come through in terms of what share prices have been doing. And I think markets are taking it in their stride so far. In terms of New Zealand as well, obviously we've got really kicking into earnest the local reporting season this week. And that starts with Freightways and A2 Milk out today. We're expecting a bit of a mixed bag, but generally a slightly positive tilt on this earnings season as we head into a more optimistic outlook, hopefully towards the end of this year and into early next.
We're all crossing our fingers and toes, Zoe. Thank you. Good to see you. Zoe Wallis, investment strategist at Forsyth Barr, and we chat markets every Monday with Zoe, thanks to our partners Forsyth Barr.